Hi there folks, Rob Pauline for New Generation FX. Welcome to the Traders blog for July 2nd, 2013. Today we're going to be taking a look at trade entries. By the way, thank you to everyone who sent us requests for what to include in the blog, and that's why we're starting with trade entries, because by far and away trade entries were something that a lot of you guys wanted to talk about, and I can sort of see where you're coming from, because I had all sorts of battles with trade entries earlier in my days as well, and made some pretty important changes, and so hopefully I can pass a little bit of that on to you guys, and you can get a little something from it. There's four things I think we'll talk about with trade entries. Now, if I don't cover off specific to you, because there were so many different things around trade entries, feel free to write us back. We'll put my social media details at the end of the video, and we can make another blog post down the road to talk to things more specific. But there's four sort of things I want to talk high level, and then maybe show you a few examples on the Forex tester that I've got up on the screen here. Okay, so the first thing about trade entries that I think, reading between all the messages that were received, is maybe a lot of you are trying to look for the perfect entry. And I think what you need to realize is trade entry is definitely not a perfect science. Think of it like waves at a beach. Every wave at a beach is different from the next one. Really no two waves are alike, and that's exactly the same way with trading. And so it's very hard to perfect a trade entry, or even trade entry criteria, when no two trades are really ever going to be entered in exactly the same way. Okay, so it's very important to be flexible around the ideas that trade entry is definitely not a perfect science. Okay, and on top of that is, if many of you, by the way you wrote to me, having trouble with entries, and really makes me wonder whether you need to step back, and it's not just trade entries that are a problem for you, but it also could be your analysis as well. So maybe something missing on the analysis side, and so maybe we can cover that off in a later blog, some ideas around trading analysis also. Now, point number two is, and this is probably for me the most important point, because for me this is when trading for me personally really took off the most, is when I accepted that the trade entry is not a perfect science, so stop looking for the perfect trade entry and focus on the bigger picture, which is why you're here to trade, and that's to make money and profit from the markets. So instead of being so fanatical and getting tied down trying to get into the right entry, focus on the bigger picture, which is getting in large profitable trades. Well, that's what I decided to work on. And what do you know? Trade entry isn't really a problem anymore that it might have been for me. So for example, if I just show you on the screen, then the top half of the screen is a daily chart. And so, if I was to enter somewhere like where I'm putting a circle here, or even later on up here somewhere in this sort of change of trend on this daily chart, euro dollar by the way, and it's dating back about a year. If I was to enter here, instead of being so tied down about the entry, really should be focusing on getting in this trend and seeing how long you can ride that for, and how many hundreds, if not thousands of pips you can make. Okay, and I found that once I focused on that sort of thing, trade entry largely sort of just took care of itself. Because once you're making highly profitable trades, any losers you might have, which is, i.e., going back to your trade entry problems, they sort of easily get absorbed in the profits. So it doesn't really become that dilemma, because I think what the dilemma most of you have is, losing, down, losing, and you're not focusing on actually getting a big winner. And so for me personally now, it's like down, down, big winner. Whoa, this is good. Down, down, big winner. Really, the losers are absorbed so easily in the big winners that the trade entry isn't really a problem anymore. So really try and we can do some more blog entries about this, some ways you can work on this, but obviously it comes back to trade management. Is think about switching your focus towards trade management, or how many pips you can make versus the trade entry, and you'll find the trade entry will actually take care of itself and maybe not be as big a problem anymore. So point number 3 is always wait for some sort of confirmation. Okay, I have back tested. You don't want to know how many thousands of tests I've done, but by far and away, I'm absolutely 100%. I might call it 150% sure that no matter what you're doing, you need some form of confirmation in your entries to give you that sort of warm fuzzy feeling that things are possibly going to go your direction. So I would never just be picking a zone and just taking a shot without, for me personally, some sort of price action, because I'm a big price action person, telling me that people are buying in the area I want to buy or selling in the area I want to sell. Now I'll cover off an example in a moment. And the final thing, the final point, number 4, is, and this is another big point that really did help me with my entries, and this was not until after I'd done years and years of back testing across many different pairs, is be open to increasing your stop loss. Yes, you definitely use a stop loss, by the way, and the level of your where you'd move your stop to break even. So for example, when I take a swing trade, I'm pretty much putting a 50 pip stop on it. So I've had to adjust lot size and things to keep my risk the same, because I don't want to risk anymore. And I've also increased the level that I would normally do break even. I used to do like 25, 30 pips. Now I've actually made it 50. And since we've done this, the profitable, not only the profitable trades, but the trades that used to be losers sort of become break evens, remotely different from the old, and much more improved. So you're basically giving your trade a lot more room to breathe to get it to do what you want it to do. Okay, so those are four points that you should think about to work on with trade entries. You should also think about some sort of simulation tool like I'm showing on the screen, Forex, something like Forex Tester, where you can go and back test thousands of these sorts of trade entries without losing any money at all, and you can do it in your own time, even on the weekends. It's real data, but it's just old back data, and it gives you great confidence in your trading. So maybe another thing to think about, okay, for you guys who haven't looked at it. So here's an example of how I like to trade. Let's take a look at basic swing trading. I like to swing trade by basically using daily price action swings, and then I like to position trade off daily move fibs or even like weekly swings. But for the sake of this example, let's assume up the top here that we've been in this uptrend on this Euro daily chart. Okay, and then if you call that a swing up there, which I probably would, maybe a potential change of trend. So what we could be looking at here is maybe something along these lines, where price is potentially going to do something like this and do that, okay, or could maybe longer term be looking to do something like this here. Pull up, maybe fib that, and then do that sort of deal. So that's what my analysis would be telling me. Just very quick, high-level technical analysis using price action. So if I was looking at this chart, I would automatically be thinking, well, trade plans for me for this pair are short from somewhere up here, and then maybe a long from, or a buy from maybe somewhere down sort of here. Okay, so this could be the sort of what we could be looking at for that long, and then this is what we could be looking at for the short. That's what I would be thinking, and I'll cover this in another blog post, but I don't really try to read the charts to that level. I generally just like to try and get things to trend and try and ride them. But that's the potential of what I see here. So let's fast forward. Now I've got a 15-minute chart down the bottom here. So daily up the top, 15-minute down the bottom. And I'm a big fractals guy. And you'll notice I've got no other indicators on my charts. Nothing at all. I just need price actions from candlesticks and fractals from a mixture of smaller and bigger time frames to do my trading, and it's all good. I don't need any indicators. I don't believe personally that there's any perfect indicator out there that makes it worthwhile using, because when things pull back and decide to move, you know, one day it's a pivot, the next day it's maybe some sort of moving average, the next day it works off an oscillator. There's nothing really perfect. So what I use is price, shorter term price. This is where my fractals come in. What I'll be looking for is if we're going to short, I'll be looking for this 15-minute chart in the bottom to show me on a smaller time frame evidence that there's actually selling in my area of resistance. So let me run through this example for you now. I can quickly speed up. This is one of the beauties of the Forex Tester. I can quickly speed up price, and you'll see the 15-minute charts zooming along the bottom. But the actual top chart is actually moving as well. And you can see here that we're definitely getting our pullback on our daily chart here. So maybe we're getting into our zone. So what we need to be doing is looking for signs of selling in our 15-minute chart once we're maybe a little bit more back in our zone. So somewhere now, if I was trading this particular pair, I would be looking for a price action change of trend on a 15-minute chart. Okay, now anything basically like what you see, even seeing here on a 15-minute chart now, anything like this in here, this pattern of being, let me highlight this way, it'll be much better. Anything, it's been in a little 15-minute uptrend here, zooming up, suddenly price at resistance on this daily little swinging down here has shown a change of trend. So I would definitely be looking to make a short sell in that direction based on what that price action was starting to show me. Okay, I don't even use fibs or anything anymore either, guys, but if you pulled a fib down there, it probably comes into the 382 zone pretty much. So I would, that would be enough for me. Put my big fat 50 pip stop on it, and off we go. And that's how I would work it. Okay, and what do you know? Getting a bit of profit, go sideways for a session or two, and then off we go. So maybe just to cover off what we did, we made a very quick trade plan based off our longer term chart that we were going to short in here at resistance off the 15-minute chart. Okay, looking for that like we have. So we're looking to short somewhere up here, and then we're looking for confirmation. That's bringing our fractals in and our price action also on a 15-minute chart, and that is all happening here at that same time where that's taken place up there, and now we're moving down quite nicely. So let's say that you missed that trade, and we're obviously swinging down again. Do we get maybe an opportunity at some stage to get a pullback to go and do something along those lines? Price going sideways for a number of days here. So pulls back up a little bit. Can we just get a little confirmation and another move to the downside? It pops back up again. See, no. See, I wouldn't short. This is not enough evidence for me for confirmation. That's sort of sideways. Okay, I need specific breakdown. So even just looking at this chart up here, I would need to see this broken. So something like that for me to short it using price action, and that's the confirmation I need to see selling in the market before I'd be willing to buy it. So there's our break. So do we get a pullback of some nature? Okay, so maybe when it pulls back to this sort of move fib there, or 50% of that drop, that's where I would probably look to take my shot. That's how I'd probably get in it there, and then off you go again, or off to the races. So that pretty much covers it off, guys. How I would treat working on my trade entries. The 4 points: the entry is not a perfect science. Got to take that into account. Switch focus towards trade management and not the entry itself. Thinking bigger pips in the trade entry will basically, you'll find, will take care of itself. When you are taking an entry, always look for some form of confirmation. It's going to save you a lot. Okay, it's a good safety net. And also be flexible, increasing those stop loss and break even values as well. I've greatly increased mine and reduced my lot size a little bit, and it's definitely worked out for the better. That's it, guys. If you feel like you need to any other requests for the blog, please, I'll leave the information on the end of this video, and also be in the text on the YouTube. Have fun trading this week, and we'll talk to you later. Cheers.